Good morning, afternoon. We're a little short for time, so if I seem like moving a little bit quickly, it's because I'll be around after lunch if you want to discuss any of the points here, so I'm not going to spend a lot of time. Additionally, what you hear today from me, if there's any opinions, it's not a Hess Corporation opinion. It's my opinion as an employee of Hess Corporation, so if you agree or disagree, you're disagreeing with me. And lastly, what you're going to hear here is just a brief summary of what's going on in the market. I'm not going to try to dig down too deep into the details of it, so we'll move right along. Talk about the big picture. We'll look at some high prices. See that word there? What word have you heard today over and over again? Technology. All right, technology has been very important, what you just heard, and technology has been extremely important in what's going on in the world of natural gas and the world of oil. So we'll talk a little bit about that, look at some demands, distribution system overview, and then look at future prices. So, how did we get here? I get asked three questions. You ready? How many people in the room are bullish natural gas for the next 12 months? One. How many people in the room are bullish natural gas for the next 24 months, period? One again. For the next 5 years, how many people are bullish natural gas? Okay. Back in the 90s, when I first got into business, I started exactly when the contract started. And what happened was there was gas everywhere, and there was very little demand. And prices, this is a monthly price chart of the New York Mercantile Exchange futures contract. All we do is the last trading day of every month, there's a settlement price, and they post it. So for 1 year, you get 12 prices. The high of the bar, the high point of the bar is the highest price for that month, the low is the lowest price. For 12 months, times 10 years, or 120 months, the spot market of the New York Mercantile Exchange did not close above 350 or at 350, but twice. All right, so the market's asking right now, are we in that same kind of period again? Back in that period, something else also happened. FERC created a rule and came out and said IPP, independent power producers. All the producers were boohooing that there was too much gas and not enough demand. So what did they do? You're shaking your head. What did they do? They said, you're an IPP. I don't care if he's 30 cents a kilowatt hour. You're going to buy power from him. You're an IPP. I don't care if he's 28. You're going to buy power from him. So a lot of gas plants got built back in this period. And ironically, those same gas plants that were built back in this period right now are keeping the energy portion of not only your electricity prices down, because we talked about capacity. Capacity is going up. Energy portion is going down. Those same plants right now are coming back full circle to be a real boon for us as consumers in the United States. So remember this peak up here also. I want you to see these peaks, these big high spiky peaks. Remember those. There's going to be a reason why those are important. All right. Look at the dollar sign in the box. Do you know what those peaks did? Those peaks said to producers, please go out and sell forward. Producers said at these prices, $13, $12, $9. Okay. Hedging. Back when I first started in the business, I remember somebody said to me, Exxon doesn't hedge. And then I was at meetings and people would talk about shareholders. And if you stood up here as the CEO of any oil company back then and said, we're hedging, what would shareholders have said? They'd have been grumbling. What would they have said? We don't pay you to be what? Speculators. Today, if you don't hedge, you know what shareholders are saying? What's wrong with you? Why are you not locking in this big pile of dollars for me? All right? So those prices that were created, and while those prices were occurring, those $13 to $15, I had people were calling me up and say, Tim, I'm reading your reports. We're breaking records for storing gas. We have more gas than I've ever seen. Why is the prices going up? Who? Speculators, because everybody said rising boat. Speculators. Well, speculators were bad, but eventually they ended up being good. Unfortunately, it was not fun sitting through $13 to get to the $1.90 we are at right now. But that box over there allowed producers to lock in 2 times their cost, 3 times, 4 times, 5x, okay? That box also is what I call a technology box. Do you know why? Because I'm going to show you a slide that those pool of dollars allowed technology, it gave technology the ability for a producer to say, Schlumberger, Halliburton, came to them and said, it's going to cost more money. I need a couple of those 2Xs that you have, those 5X, I need 2 of them. Producer says, well, I'd really like to keep all 5. So, well, you have to go backwards to move forwards. These high prices allowed forward hedging. Just like a consumer wants to lock in low prices, producers wanted to lock in high prices. That's exactly what they did. So these high prices And the speculators at that time and the futures market or any other forward market allowed producers to go lock in, grab these dollars, and these dollars were applied to technology. Okay, let's switch gears for just a second. We talked about, I heard read in the Boston Globe. What is the number that you hear every time when somebody says, how much natural gas do we have in the United States? What's the number that comes the first thing to mind? 100? How many people have heard that? We have 100 years of natural gas. Your own government says maybe we do, maybe we don't. This is a slide. Everything in this presentation is a public domain. So if you want it, I'll show you where to go get it. I'm a big fan of the government. EIA, love the people. Known them since 1990, hardworking, very diligent. They don't really have a thing. Their view is we have about 11 years of proved. You know, proved is, proved means we know we can go get it. You know what unproved is? 2 words, less certain. Some people say, well, that's just an accounting term, Tim. You know engineers know engineers. I'm an engineer. I know we can go get it, Tim. Well, accounting says you can't. So what we know is 11 years. So when you go out and somebody says, I heard there's 100 years, you say, well, you know what? My own government says there's about 11. And there's about 70, 60, 91, that's about 70 if it's uncertain. Okay? So what I want you to take away from this is there's big numbers, trillions and billions, and people throw around numbers like 100 years and this. All I want you to do is, when you hear these numbers, ask questions. Question it. All right? Question it. That's another slide. When I was here 5 years ago, the amount of these regions was probably 50% less. They're finding shale on top of shale on new areas they never knew. China's finding shale. Poland's finding shale. We're trying to drill in the Paris Basin in France, and Paris says, we don't want none of that fracking stuff. But people are finding shale all over the world now. We're finding it in our United States. You know what the good thing about this is, though, again? What happened to BP Macondo? A loss of life and billions of dollars. Exxon had a well very similar to BP's about 5 years before that. They shut it in. They told shareholders we're going to waste $1.2 billion because we don't think we can control the pressure. Oops out in the Gulf of Mexico can cost a lot of money. If I have an oops onshore from some of these shale regions where I miss, and I don't hit the shale region like I thought, or there wasn't as much gas as I thought, it might cost $7, $15 million. Knowing where these sources are makes them easily accessible and lowers the finding cost for them, lowers the oops cost. So what you're seeing here is just a real transformation of the United States. Notice the top up there, Bakken. I call it the Rockin' Bakken. Hess is producing, along with other companies in the United States, enormous amounts of oil are coming out of the Bakken due to horizontal technology. I'm going to show you a slide about horizontal technology. All right? Horizontal technology, most people associate only with gas. It is being applied to oil. We are setting record productions in the North Dakota market. We are now the highest oil production we've seen since 1998 in this country. Are we away from imports? No. Are we a lot lower? Yes. This is a slide of what the overall picture of hydraulic fracturing looks like. Let's start with the top side. You see a lot of trucks. I went to a well down in West Virginia. It was the most stunning thing I've ever seen. I must have been born an engineer in another life because I was like a kid in a candy store. There were trucks, there were wells, there was hydraulic fracturing, there was sand, there was water. I walked into the booth where Baker Hughes was fracturing, and on a screen I saw 6,583. 6,583. It's 6,503. He said, tell me that's not PSI. He said, that's pounds per square inch. That's how much pressure is being blown into the rock along the fracture lines to get these open. So let's start topside. 5 years ago, we used to use 9 million gallons of water. Now we're using 3 million, and most states are requiring recycling. Notice on the right side, the water table. This is not a plug for the industry. But if there's an oops, in the BP Macondo, there was an oops, a loss of life. If there's an oops here, and we get water, or gas in our water, it's because the casing that's going down cracked. And that's going to happen. Any fossil fuel extraction, there is a possibility that something's going to occur. Not defending the industry, but for the most part, it's not because the water table gas was coming into the water table, it's because gas leaked into the water table somehow, some way. Going down below, notice we're going down almost a mile. 5 years ago, if I was standing here, we were going down a quarter mile. Remember that pool of technology dollars? Somebody said that shale's 8,000 feet. Down in Haynesville in Louisiana, it's 11,000 feet down. They said it's going to cost a lot of money because I got to break through a lot of rock just to get to the shale. They said, I got a big pool of dollars. Go for it. All right? So those gains have allowed, those dollar gains allowed technology gains. We're now going down 1 mile. Some of the areas we're going down 1.5 to 2 miles. One thing that you saw the shale map, not all shale is the same. Some of it's higher, some of it's lower, some of it gets more gas flow, some of it doesn't. We turn this drill bit, we turn it. So I'm in this, another move to the drilling. They pound through the rock, they get down to the shale region, they bring in a very sophisticated drilling rig. You go climb up these steps to a thing called a doghouse. There's 2 chairs, it looks like kids playing video games. They have a dish coming off. They're sending technology back to a supercomputer in Ohio that's sending back, and they're telling them to move it 0.1 degree. He said, you think of a golf club. If I move the face of a golf club just a little bit, over 300 yards, that's a big difference in the trajectory, correct? They're able to sit up there through supercomputers and guide this drill bit. And the drill bit is actually feeding stone back up. It's giving them real-time flows to understand that they're not in the shale they want to be. They may have a rock. They can literally go up and around and come back down and get into the shale region. Those pool of dollars I showed you in that big slice is helping to pay for the brilliance that I saw there, which is the most stunning thing I've ever seen in my life. A mile and a half, 2 miles below the earth, hitting a band of shale that might only be 500 feet, 2,000 feet wide. Going along it, staying in it, and being able to do all of this in real time. What's the supply mix look like in the future? This is your government. Again, this is their estimate. Tight gas. Let me just say something real quick about tight gas. Because when I was at a meeting recently down in Washington, D.C., there were a lot of people from the West. And they said, you know, what's interesting about this is everybody's forgot about us. I said, well, what do you mean? Out West, they have shale. They go down, they break rock. Out East here in the shale. Out West, they go pretty much on federal lands. So when Interior Secretary Salazar said that they're going to make a lot of stricter rules on federal land, they weren't happy. But they said, we've been around a lot longer than you. So you see how tight sands, they do the same thing. You go down, it's a different formation, but you're still fracturing it, you're still getting gas, has been a very important part of the gas mix in the United States. It's shale gas that's really taken off. So you can see that we're putting a lot of eggs in our basket on shale moving into the future. This is in the public domain. We have a company that we deal with called Bentech Energy, LLC. Our government, unfortunately, gets data that's 2-month delayed typically. Bentech tracks real time. All the pipeline systems that Cindy was talking about, if you're an interstate, you will have to go on an electronic bulletin board. Intrastates, unfortunately, they challenged it down in Texas, Louisiana, FERC Order 720, and the court sided with them and said, no, you don't have to put on electronic bulletin boards. But Bentech basically tells us every single day in a report what real-time flow is in the United States. If I was standing here 5 years ago, this 5 BCF, and this 5 BCF now, I just put this slide up from like 6 months ago, this 5 BCF is almost 7 BCF. That's how much gas is coming out of Pennsylvania right now. All right, but this is on Range Resources. Investor presentations, if you so desire, the investor presentation site for most of these large producers will tell you things that will stun you. They'll show you, you could be a mini engineer just studying them. But look at the rate of growth here. I know most of you thought this was my 401k, but it's not. I'm not that good of an investor. But look at the rate of growth. Again, 5 years ago, I'm giving you the same example. I would have been standing up here and say, you know, by 2012, we're expecting maybe we'd have 1.5 million decatherms. We now have 5. No, we actually have about 7. Profound technology gains. Unbelievable technology. Who's the winner, chicken dinner, as per our government? I was down at NESA, New England Sustainable Energy Association down in Washington, D.C. They invited me down. Why, I have no idea, because I'm not that smart. But they love this slide. I said, this is a 7-Eleven. I said, you guys are going to go from 7% as per the government to 11. It dudded just like it just dudded now. I told them a convenience store. Renewables. The government thinks that renewables are going to be the biggest growth moving out in the future. Again, I ask, how many people have read coal is dead? Anybody seen headlines, coal is dead, right? Coal is not dead. We're just going to clean it up. Here's what the EPA said. Why is everybody boo-hooing about coal? Cross-state air pollution rule, MATS rule, mercury air toxic standards. Why is everybody complaining? People say, well, what are you talking about? I said, do you know that 55% of the nation's coal plants were cleaned up, scrubbed, long before we initiated this rule? And the other 45% that's left, most of the units are so old that 15% of the 45% is going to be closed anyway. They were already planned to be shuttered. So moving into the future, as you can see, my opinion is that coal's not going anywhere. It'll just be cleaned up. Again, the National Energy Technology Laboratory, Department of the Department of Energy, 2 major projects going on right now, and both are with carbon capture and coal gasification. All right? So our own government's spending a lot of money to make sure that coal doesn't go away, and I don't think it's going to go away either. Just my opinion. But renewables look to be a significant part if you believe the government. Lastly, the distribution system. Liam asked me to discuss the distribution system here. But basically, we have oil, gas. We move it through the pipeline. We separate the oil from the gas, from the liquids, and I'm going to talk about that in a little bit in the appendix. Move it through a gas processing plant. The gas that you see in your stove or at your burner tip is methane. 1 carbon, 4 hydrogen. It's cleaned. No sulfur, no impurities. The other impurities are moved out and taken to different parts of the supply chain, especially if it's liquids, especially if it's crude oil. Mainline sales. You might have some customers here in the room that directly hook into a pipeline. So there are mainline sales. We move the other stuff into storage. If we don't consume it, what do we do with it? We store it. Storage right now is at a record. Thank goodness we have as much as we have, because I don't know what would happen. We'd probably have to shut gas in. Eventually we move it through the city gate to you, not into the consumer. So this whole process of basis, talking about transport coming on, capacity, all of this is changing dramatically. New pipelines coming to New York City, new pipelines coming up here, new pipelines coming everywhere. Really been a stunning amount of production that has been going on with gas and the building out of the pipeline structure. Lastly, if you type in FERC, natural gas, F-E-R-C, natural gas on Bing, Yahoo, or Google, your own government's tracking all this for you. So if Sempra came out and said that they're going to do this, they're going to have it because they had to go through FERC to get the authority to do that. So your own government is tracking all the new LNG facilities. Okay, Sabine Pass, Cheniere just announced that they're going forward with a LNG liquefaction plant. FERC is tracking all this for you. You can type in FERC LNG, the same thing will come up. What does the market think about what's going on in the room? We only had one person bullish 1 year. We only had one person bullish 24 months, and we only had one person bullish for 5 years. This is the New York Mercantile Exchange. I don't weight this for heat load. It's just those 12 months for the 12-month strip, the first 12 months. Then I take 2013, add them up, 14, 15, divide by 12. What are these lines doing? Which way are they going, up or down? Sounds like the market's buying into this. But you know what? The market bought into $145 crude and $13.92 natural gas, didn't it? Remember what I said. Take things with a grain of salt, because what looks one way now might look completely different. Make your own decisions about it. Whether I stand up here, Hans, or whatever, things can change very rapidly. For the time being, despite an LNG facility being announced, and despite it's pretty much accepted in the industry that by 2015, late or early 16, Canadians will probably beat us with Kitimat on the British Columbia coast, an LNG facility. They might even have 2 facilities before Cheniere gets built out. But the bottom line is, despite the fact that Canada would build an LNG facility, how would it impact us? Canada says, you know what? We're tired of being your whipping boy. We'll just send it over to Asian markets. We won't import as much to you, and you'll have less gas coming in. So there could be a significant change from Canadian LNG that people don't even envision right now. We're importing right now about 5 to 6 million decatherms of natural gas from Canada. 5 years ago, we were importing between 9 and 10 million. All right, if they start exporting LNG, things could change. So take it with a grain of salt. The market right now, all the way out, this is all the way out to 2024. That top line is 2024. All right, I'm just going to do it through appendix real quick so Hans gets a chance, but these are some slides. We can talk about this later. Range resources. If you look at the state of Pennsylvania rectangle, up in the top right corner, that's called the dry gas area, and I'm going to show you the next slide what dry and wet is. But that dry gas area, range resources, says in 240 days, my initial flow rate declines from 7,500 decatherms down to about 2,000. I get a 73% decline. I'm going to give you an opinion. It's not Hess Corporation. By November of this year, things could look a lot different than they do right now, because as per Baker Hughes and all the other companies that track drilling rigs, we're at 10, 12, and 13-year lows in some of these regions for gas-oriented drilling rigs. So 240 days from now, January, EIA reported a peak supply of about 66 BCF a day of dry gas. 240 days from that peak, or somewhere plus or minus a few months, things could be a lot different than they are right now. So just keep that in the back of your mind. This is range resources. I'm going to give you my Neapolitan ice cream example. In my world, there's only 2 kinds of ice cream, vanilla and Neapolitan. Vanilla beans are thousands and thousands and thousands of them everywhere. The price of vanilla beans are about a penny. This group over here can only produce vanilla. They're not very happy right now because they're bashing each other just to try to get customers. This group over here can produce vanilla and Neapolitan. They really don't want to produce the vanilla, but they got the plant, they might as well do it. In short supply is strawberry and chocolate. We'll call strawberry the natural gas liquids. We'll call chocolate the WTI. Somebody says, why do you keep producing vanilla? I said, well, I really don't want to, but my Neapolitan machine runs, and it has to have vanilla to go with it because it wouldn't be Neapolitan. So you're pretty much just breaking even on your vanilla. I am. Well, how much are you making on the strawberry and the chocolate? Well, on the strawberry, I'm making 6 times what I would make on the vanilla, and on the chocolate, I'm making 8 times the price I'd make on the vanilla. So I'm going to keep producing Neapolitan. That's exactly what's happened here. Lower left, what's the price? $2.60? I'm not even looking up. $2.60? I've done this so many times. You know what range is telling you? I'm producing natural gas liquids. You ready? Here we go. 1 carbon is methane, comes out of your burner tip. 2 carbons is called ethane. Typically comes out as a gas. All right, so you'll hear some people say natural gas liquids is ethane. It's really not. It's a gas. 3 carbons are propane. You can burn that, right? 4 carbons are butanes, isonormal butanes. That can be used for chemical manufacturing, as can the ethane. And 5 carbons are pentanes, and I can put that in the natural gas, or excuse me, the gasoline pool. All right? So Range says, you know what? Even if I get 0 on my vanilla, I can net out the $2.60 off my $6.35, and I can still make a lot of money. Producers in some of those areas, Eagle Ford down in Texas, the Marcellus, again, back into Pennsylvania, top right, the Pennsylvania rectangle, dry gas. Lower down in West Virginia, southwestern Pennsylvania, wet gas. They're getting these liquids. Those liquids are priced anywhere between 40 to 50% of the price of crude oil. I just saw an estimate, what I thought by one of the banks was a little high. They said their estimate was that those liquids garnered 65% of the price of a barrel of crude oil. Okay? That's about $17 a decatherm. 65% price. So you're going to keep producing your Neapolitan ice cream, even if you get 0 for the vanilla, because you're getting a big uplift. So this is what Range is telling you. This is called associated gas. I'm drilling for crude oil, and I'm getting some gas. I really don't want the gas. I want the crude oil. I'm drilling for gas, but I'm getting liquids. I really don't want the gas. I want the liquids because, if you believe the bank, I'm getting 65% the price of a barrel of crude oil. All right? So you're going to keep selling your Neapolitan ice cream because you're getting the price uplift. Lastly, what pipelines are going? These are all the pipelines coming into your area. All right, Cindy talked about it. All right, new projects coming in. Again, this is FERC. If you type in FERC natural gas pipelines, they'll all come up and show you all of them. Thank you.